Good morning, team. Hope you're fine. Hope you're well. Hope you had a good day of activity yesterday. Today is 12th day of February 2021. As I told you from yesterday, that we are going to start different topics of training. And yesterday we stopped at life assurance. We understood what life assurance is all about. As a recap, we said life assurance is risk management for a long period of time in our lives, and the main objective is maintaining wealth and having financial protection. I don't know whether we remember that very well. That's where we stopped. And I further explained the meaning of maintaining wealth and the meaning of financial protection. As a recap, I said maintaining wealth is ensuring that someone has money now and money in the future for whatever purpose. It could be for educating their children, it could be maybe to start a project, maybe to build a house, to buy a piece of land, to wed a wife. It could be to buy a car that someone needs money in the future, maybe 10 years from now, to buy a car. Or it could be for retirement, for whatever purpose. So people need money now and money in the future. We need money now and money in the future. So the only way someone can have money now and money in the future is through maintaining wealth, where life assurance is the solution. Then, for financial protection, what we meant by financial protection, we said that finances provided in the event of a risk. And we gave an example or different examples of risks. We said death is a risk, permanent total disability, critical illness, last expense, all those are risks. But in the event of those risks, insurance provides finances to take care of the life assured or the beneficiaries of the life assured. So when we say financial protection, we are saying finances will be provided in the event of a risk. Hope we are together at that. So today, one of the products we are going to talk about is Endowment Assurance with Profits. Endowment Assurance with Profits, it's under Life Assurance. There are so many products under Life Assurance. We have individual products, we also have group products. Under individual products, that's where you're going to find Endowment Assurance with Profits, you find a total education plan, you find a triple P back, you find Investor Plus, personal savings plan, personal retirement scheme. You're going to find value added term assurance, whole life, level term assurance, and so many others. But today, our main interest is Endowment Assurance with Profits. As I told you, the main objective of the big portfolio of life assurance, the main objective or the intention why people buy life assurance, an objective, what do you intend to achieve at the end of the day? So if someone buys life assurance, I said they intend to have financial protection and also maintain their wealth. So all these products under life assurance, some maintain wealth, some give financial protection, but then there are some that combine, that when a client buys them up, they have done the same thing. They have maintained their wealth, at the same time they have also gotten financial protection. Then there are some products whereby when they buy it, they are only having financial protection. Then there are others that when they buy them, they're only maintaining their wealth. But there are some that combine. Now the product we have today in play is Endowment Assurance with Profits. When a client buys it up, he's doing two things at the same time. This client is maintaining their wealth, at the same time they are having financial protection. What does that mean? That this client wants money now and money in the future. At the same time, in the event of a risk, they still need money from an insurance company. In case they pass away, they need money to be provided to their beneficiaries. In case they are critically ill, they need money to take care of their treatment. In case they are permanently disabled, they need some finances to take care of them through that situation. In case they have passed away, they need burial expenses to be catered for by an insurance company. So endowment assurance with profits combines the two things. When a client buys it, they are maintaining their wealth. At the same time, they are having financial protection. Are we getting it? For someone to qualify for endowment assurance with profits, we look at their age next birthday. And the age next birthday bracket is 20 years to 55 years. 20 years to 55 years. Anyone's age next birthday below 20 years cannot qualify for endowment. And anyone's age next birthday above 55 years, they do not qualify for endowment assurance with profits. When I say age next birthday, I mean what someone will be next year. If, let me say, Brenda is 37, her age next birthday is 38. Are you getting it? If you find someone who is 20 years, their age next birthday is 21. So when we say that we are taking up someone of endowment, their age next birthday should be between 20 to 55 years, meaning the actual age is 19 to 54. So anyone below 19 actual age cannot buy endowment assurance with profits, and anyone above 54 years as their actual age cannot buy endowment assurance with profits. Then for the policy term, when I say policy term, I mean the period the client can have this cover with us. The time, how long can a client have this cover with us? How long can someone maintain their wealth and have financial protection with endowment assurance with profits in ICA life assurance company? So that period is what we call a policy term. So the policy term for endowment assurance with profits is between 10 years to 25 years. It is in a series of 5. What do I mean? That a client can have a 10-year plan, a 15-year plan, a 20-year plan, and a 25-year plan. Someone cannot have 11, 12. It is a series of 5. 10, 15, 20, and 25 years. So anyone cannot have a policy of endowment below 10 years, and anyone cannot have a policy of endowment above 25-year policy term. So minimum policy term is 10 years, maximum policy term is 25 years. A series of 5, 10, 15, 20, 25. As long as the client is between 20 years, as in terms of age next birthday, to 55 years in terms of age next birthday. Hope we understanding that. So what does endowment assurance do, or how does it operate? When a client opens it up within the age brackets I have talked about, they are maintaining their wealth. At the same time, they are having a financial protection. What do I mean by maintaining wealth? Maintaining wealth in the layman's language, I said having money now and having money in the future. As I said earlier when I was defining life assurance, there is what we call richness. But many of us think that when someone has money on them, liquidity, that they are rich. It is wrong. What they call richness is maintaining. If you have money now, the question is, will you have it in the next 10 years, 15 years, 20 years, for whatever purpose? If you are not so sure, then you are poor. In other words, when a client buys endowment assurance with profits, they want to have money now and money in the future. They want to maintain their wealth, which we call richness. It means they're yearning to be rich for whatever purpose. The only way someone can have money now and money in the future is through doing 2 things. 1, save, and 2, invest. In other words, when a client buys endowment assurance with profits, they are saving their money, and 2, they are investing it. They are saving their money, and 2, they are investing it. The person would ask, why not save in a bank or invest in a bank? The difference between endowment assurance with profits and the bank, that we do not only stop at putting aside the client's money or investing aside the client's money, we also give financial protection, which is the core of this product, what we call a life cover. That this client who is putting aside money with ICA under endowment assurance with profits, this client who is saving their money with ICA, that we're not only going to stop to invest it, but we are going to also give them a financial protection. Within that period, they are saving their money with us. We are going to give them finances in the event they are critically ill. We are going to provide them finances in the event they are permanently totally disabled. We are going to provide them with finances in the event they pass away, premature death. Let me give a simple example for you to understand it better. As I said, minimum years to save an endowment assurance with profits are 10 years. A person can choose and says, maybe I want to save for a piece of land that after 10 years, I want to buy a piece of land worth 100 millions. He comes into ICA and you're like, okay, in 10 years you want 100 millions? Please save this amount of money. According to his age, we say, okay, save 1 million shillings. So every month this client puts aside 1 million shillings. At the end of the 10 years, we will not only give him 100 millions or what he has saved. We'll give him what he has saved, the total amount of money he has saved, plus an accrued bonus. Because we were saving his money, but we are also investing his money. But the beauty about this product, because we know that very well, that a bank can do the same thing. The difference between endowment and a bank product is, this client who opts to save this money in an insurance company under endowment assurance with profits, yes, he might have a dream to save for a period of 10 years. He might want that piece of land in a period of 10 years. He has started saving his a million, but God forbid, he faces something uncertain along the way. He has only maybe saved for 3 months. He dies. Will he have achieved his land that he wanted to achieve after 10 years? No. If he had saved in the bank, then it would be so bad for him. But if he has saved for an insurance company or in an insurance company, we are saying, even if it is death, it cannot stop the client's dream. Even if he has given us money for 1 year and he had a dream to save money for 10 years, we will compensate the family 100 millions. His dream of 10 years. But the question is, has he given us that money? No. That's what we call financial protection. That will provide finances in the event of a risk. A risk cannot stop someone's dream to come to pass. We have to make life certain, either death or alive. Are we getting it? So, even if he has given us money for 1 year, he has only saved money for 1 year, 12 millions. His target was to save 100, either 20 after 10 years, but he has only given us 12 millions money for 1 year. They tell us he has passed away. We will compensate the children the sum assured, 100 millions immediately. Not waiting until the end, but immediate. But he has only given us 12 million. That's what they call financial protection. We are saying either a person is dead or alive, the dream will have to be achieved. So if he doesn't pass away, what if he doesn't pass away? He saves very well and all the 10 years are done. He has saved the 1 month until the 120th month. Whatever he has saved, we will have invested it and we'll give him all back his sum assured plus the accrued bonus. Hope you've understood me. So if he has not passed away, if there is no event of risk, at the end of the policy term, he'll get his sum assured plus the accrued bonuses. You know, when I say that, Sometimes people think it's impossible. They ask, how does an insurance company benefit? I've only saved for 1 year. I had a target of saving for 10 years. I die after 1 year. They compensate my family 100 millions. Where does the insurance company get that money from? I don't know whether you've heard of reinsurance companies. Because of time, I can't go back into that. When you insure yourselves with us, we also reinsure you. It depends on how many reinsurers we have. Not only that, a risk, it's a law of numbers. All the people that we have put in one pool cannot all pass away at once. We pool the money and we share the uncertainties to make life certain. And not only that, we also reinsure ourselves. When you pass away, assuming you are reinsured 7 times and we've compensated 100 millions, we are also going to be compensated back. But if you don't pass away, it means the money you have been saving with us, we have been investing it. We pay the reinsurance as a portion, but the remainder we've been investing it. So you get back all your money plus the accrue bonuses. Now, not only that, apart from saving and investing your money or compensating in the event of death, even when you are critically ill within the policy term, assuming they say you have cancer, paralysis, kidney failure, and it has persisted for more than 6 months, and the doctor says this is a critical illness. If you have a critical illness rider, ICA will compensate you 30% of the sum assured to assist you on your treatment. It does not mean that the money you're saving with an insurance company, it's what is reduced. If you get back, you continue with your policy term. Even after the end of the policy term, you get back your sum assured plus the accrue bonus, despite us spending on you on your critical illness. If you become permanent totally disabled, we can compensate you up to 20 million to take care of your treatment, yet your principal, the sum assured, plus the accrue bonuses have remained untouched. Not only that, if you have an endowment assurance with profits, assuming it is fixed for 10 years or 15 years or 20 years or 25 years, whatever period of time you have chosen in terms of policy term, if you've chosen endowment assurance with profits and 3 years down the road, you have a financial constraint. Remember, it's like a fixed deposit account just because it has a life cover. But then after 3 years, you have a financial constraint. We accept you to borrow from your savings without using anything as a credit security. We can lend you up to 75% of the surrender value without using a class. Your policy you have with us is enough to guarantee you a loan. So you can borrow up to 75% of the surrender value. Then you can pay it back within 2 years at an interest annually of 16%. Your borrowing does not mean that you're off cover. Even if someone passes away, when he has a loan, we'll still compensate the family as sum assured, but less the loan he took away from us. Maybe sometimes people do not know why they need to save, because sometimes when you talk about saving, investing, having a financial protection, some people would say, why do I save? Many times people don't know why to save. They don't have reason to save. The first reason why we need to put money aside, one, it's to maintain wealth. You need money now, but you also need money in the future. If today you have a nursery kid, the time you're retiring, your daughter will be joining university, but ironically, that job is getting to a standstill. You need money to take care of the university education. So if you're not working anymore, what will be that to assist you to pay the tuition? It's the savings that you have put aside. You need to maintain that kind of lifestyle. If today you're saying, you're living a lifestyle of 3 million per month. Even when you retire, you need to live that same kind of lifestyle, even a better lifestyle. If you're saying you have money in NSSF, ask yourself, how much is that money that you get in NSSF? If today you've been living a lifestyle of 3 millions, that money that you'll have in NSSF, will it be enough to sustain that kind of lifestyle? Let me use a simple example. If you are to retire at the age of 60 years, if your client is to retire at the age of 60 years, and God gives him life up to the age of 95 years, those are 35 years without working, but you need to survive. That client needs to survive through retirement. He was used to live a life of 3 million per month. Maybe NSSF gives him around 100 millions. Can 100 millions take care of him for a period of 35 years, maintaining that kind of lifestyle he had introduced himself to, a lifestyle of 3M per month? If you calculate 3M, 3 millions, times 12 months, times 35 years, that talks about 1 billion, 1.26 billions. And you're saying you have NSSF money, it will be 100 millions. Can it sustain that life you've introduced yourself to? So we need to save. NSS, the money we have in NSS, it's just a starting point. So we need to put more to be in position to sustain that kind of life we've introduced. And insurance is one of the options. Can you top up your NSSF money with insurance? Whereby insurance, at least it has a life. If you're critically ill, there is money to take care of your treatment. In case you're permanently disabled, there is money to take care of your treatment. In case you are dead, there is money to give your family to take care of them, which can't be done by NSSF. Today, if you're critically ill, can a person go to NSSF and tells it, please, I need at least 30% of my money to take care of my treatment. Can they give it to you before you retire? No. In case you're permanently disabled, can you go to NSSF, please give me some portion? In case you die right now, and you had a dream to put money in NSSF of 100 millions, and so far you put money for 2 years, can someone go to NSSF and tells that NSSF, please, compensate my family 100 million, that dream I had that I had not yet achieved? It can't. It's only insurance that can do that. Please, it is possible. Encourage your clients to save, invest, and have a life cover in insurance. Those clients who are saying it's impossible, they don't have enough to put aside. They have enough. It's the lifestyle. They spend a lot of money on airtime, on money on fuel. They spend a lot of money on this hair. For example, you'd find a lady on a monthly basis uses 100,000 on hair. In a year, he has used or she has used 1.2 millions. In 10 years, would have used 12 millions on hair. 1 year down the road, if he passes away, can the children go to the salon lady and they ask for 10 millions because their mom supported her so much, so that it can take care of their education or pay the loans she has left around or buy a piece of land? It can't. We are driving very expensive cars. You find someone is only earning 2 millions or 3 millions and every day uses fuel for 30,000. In a month, if there are 20 working days, has used fuel of 600,000. In a year, it is 7.2 millions on fuel. If someone lives such a kind of lifestyle, in 10 years has used 72 millions on fuel. If 1 year down the road or 2 years down the road dies while he was driving that car, can he go to the petrol station man and tells him, Munange? Or the children, can they go to the petrol station man and they say, Munange, daddy supported you in 2 years. Please, can you give us 70 million to take care of our education? Or pay rent? Or take care of the needs? It can't do that. So why not buy life assurance? Why can't we reduce on our CC? Instead of driving 3,000 CC, you drive 8 and you drive a Vitz to have something to put aside for your own good and the family's good. Please advise clients. It's very important. Tell them they need to save. They need to put money aside. And they do not only need to put money aside, they need to put it in an insurance company, which has an opportunity of a life cover, that in case there is death, there are finances given to the family. In case there is critical illness, there are finances provided. Nothing happens, there is money to take care of them at the end of the tunnel. They have a lump sum plus a cool bonus. They can even borrow after 3 years. That is endowment assurance with profits. Thank you so much. Any more disclaimers about endowment assurance with profits? I'll do a highlight tomorrow to explain more about the don'ts of endowment assurance with profits. Today I've been on the good side of endowment, but there are things concerned with a breach of contract. You know, it's a legally binding contract. It's between two parties, the life assured and the company. So there is a role to play by each of the parties. And if there is breach of contract, there are terms and conditions, which I'll discuss tomorrow. Thank you so much. Have a blessed day. Bye.